Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein, and today is Friday, July 29th, 2011. The time getting on about 1:10, 1:15 in the afternoon. And yeah, this is the earliest I've done a show in a long time, and that's because at the end of the day, I've been so wrapped up, as you all know, and I'm ending up doing them at 5:30. I don't want to do them at 5:30. I like to do them between 1 and 2, ideally, but it's been very difficult with the business going on the way it is right now. All right, let's talk about what's happening. The stock market's giving you a pretty good idea of what's going on. You're already off the lows 120 points in the Dow. You're off the lows by 18 points or so in the S&Ps, close to unchanged, and you're higher in the NASDAQ. The NASDAQ has clearly been the strongest of the indices, and if you look at that financial report, the video I put out, you'll see that. What about the gold market? Well, gold's holding up as I come up. I'm going to start with currencies, actually. You're up in the Euro 76, down 40 in the dollar. The dollar break, and that's what I wanted to say, is helping gold stay up about $10, $11. Silver up in the neighborhood of about 20 cents, and the copper market sort of looking, hey, what about me, guys? What do I do? Is the world economy going on? Or if they get everything settled, am I going to need more copper? That's the game, and you got to think of it that way. Let's take a look at the gold chart as I step back. You can see this market from basically the end of June right through July has soared to the upside. Now, when a correction comes, you'll probably get a correction of 3 to 5%. Just expect it. It's normal. Off of a run like this, you've come from 1480 right on up to today's high of 1637. So for all purposes, you've gone up nearly $160 an ounce. It's a huge rally, and it's almost 10%. All right, can it keep going? Well, the reason gold is running right now is because we don't have our act together. It depends how the House of Representatives vote goes and then what they say to us over the weekend in the Senate, so you're forced to play it that way if you're going to be a gold player. And, you know, behind us, our brethren in Europe, they got nothing but problems. Big-time problems. That's getting swept under the table, but as we go away, you're going to see more issues that show up there. This is not an easy situation right now. And when I blow the chart up, you get to see that. Here's yesterday's action. Gold got down to 1605 and took out a previous break low. When that occurred, at that point in time, you had a lower low. In order to reinstate the market bullish, you've got to start with a reason to take out this last rally high, which you've now done. Got it? So the swing line is back to the upside. No question about it at this point in time. What about moving averages? Well, the 18-day average of close is around 1586. That's even under the 1605 area. And from today's high, up 1640, well, heck, if you had a 5% correction, that's not too far off from it, is it? Just think about it. That in itself is about $60. So you get a $60, $80 correction, you're in that general zone. That's interesting to me. When I look at the 45-day and the 100-day average of closes, I get even more excited. I'm looking at the 45 with its long-term support of 1552 and the 100-day moving up. So what I'm really saying in plain English is, yes, at some point there's going to be a gold correction. August, though, is the month that I look for that correction, and from a seasonal point of view, that is the buy month in bull years. And you typically look for the market to gain through the end of December. I wrote a gold report where I talk about all this. I back up what I've just said with the statistics. USA Gold did some of the study. I did some. I show you the more research report in this as to how their seasonals go in bull year and bear years. And guess which month is the pivot month? Yes, August. Got it. So I talk in here about the trade. As you know, we've been making recommendations in the futures, and now I'm going to make a vertical call recommendation, and I talk about it in this report. How do you get it? You call us at 1-866-973-2077. Yeah, it takes a phone call. You don't want to call, you don't get the report. You want to call, it's free. If you've not had our futures trading kit, they'll send that all out to you. You get to work with these charts, see my twice daily research, and so on. I think you'll find it worth your while to look at. Whether you do anything with it, well, that's up to you. All right, so you can see that I'm bullish. The Bollinger Band top at 1647.60 is where I'm looking for the stage of resistance to come in. That's about $20 higher than here. Support 1580, and should the market come down, well, I'm looking for 1528 on the downside Bollinger. Now that number is going to shoot up a little bit, and where I think it's going to intersect is back here in the 1550 area, the 45-day average. So I have reason to believe that if you got that 5% break, that would be the support zone. The dilemma is you may not get it. The dilemma is that if everything keeps going wrong in the U.S., you just keep rolling on. This has taken on its own life, and if you don't want to be left behind, well, you're almost forced to nibble into the market. That's the way I look at it. This is the key, the embedded stochastic. This is the overriding technical tool that I talk about. When that's embedded, you're looking harder and harder for buy signals, and the swing line takes a second line of importance. This is the line of importance. And until this red line turns down, I say that the market's got bullish momentum to it, and I'm looking for that Bollinger Band top until I have a reason to think differently. In the silver market, you're trying to hold on and get your embedded stochastic. Now, let me just see if I can, I just hit the wrong button again. I want to hit escape. Give me a moment here. All right, this should allow me to do it. Yes, I'm sorry I had to step off camera. If the person were doing this were watching, it would help me. The market gets under 40.05. This is yesterday. Your stochastic slips, but it doesn't lose its embedded status. This is today. Coming in, you lose your embedded stochastic. And if you'll notice, this 80 level, you're giving it back to 79, 80. It's going back and forth right here. This is not the same pattern as the gold chart. This chart should be avoided right now. Gold has taken over the leadership again on silver as far as I'm technically concerned. In the copper market, you tell me what's been going on. Now, here's the market back to the 18-day average of closes. It has not at this point made a lower and low in any sense. It's been correcting off of an overbought condition. It lost its embeddedness, brought itself back to the 18-day average. If you get over this high right here, and this day's high was specifically 442.60, then you dropped with the low of 437. That's a lot of risk. You'd have to buy over that high, which is $1,200 in approximate risk as long as this low wasn't taken out first, looking for a challenge of the Bollinger Band. You did it, but doesn't mean the risk wasn't there. Now you're in overbought territory, and this is now Wednesday of this week. You're fighting at the Bollinger Band. You're slipping back. This is yesterday and today. Look at how you come down. You're holding the 18-day average. Now you might say, well, that means the copper was a buy there. Well, yeah, if money's not a real factor, copper's a buy against the 18-day average. Stop under that low, and that's your resistance point. But you are overbought. You haven't got your embedded stochastic, so the reality is sometimes the chart action is ahead of the momentum built into the market. That's all that I can say. I certainly wouldn't have been telling anyone to be short. Crude oil. Okay, I think this is a problem. Big time problem. The low right here is 96.51. This is yesterday. Here's today's low, 95.05. You take it out at 94.95. Now, I certainly would not be telling you to go short here. Your Bollinger Band is right here at 95.93, and you're already back to 95.01. But the resistance is 97.77. Guess what the trend is now? Down in this market until you take out 119 as far as I'm concerned. This just shows you on this chart how many ounces of silver you need to buy an ounce of gold. And as you can see, it went flat, and now it's starting to climb just a little bit back over the 40 level. Okay, but it hasn't done anything to say that suddenly gold is really into an uptrend against silver. Every time this number falls, like it did back here, you need less ounces of silver. It had more value. And what we did is we got to a plateau in the 45 level or so, came back down towards the 40s. We're drifting right here. We'll see if silver can pick up any momentum from that. This chart is the Reebok gasoline. Now take a look at it. You made a high, lost your embedded stochastic yesterday. Let me show you the day before. You didn't lose it. As far as I'm concerned, game's over. I don't need to take out 304.84, but it did the job. You're out of your uptrend. I don't care what this market does today. You're into a downtrend. The potential back to the Bollinger Band and resistance point, the 18-day average of closes, and I'd view the trend in this market as being temporarily to the downside. This is the Brent crude. It's the same game. The market is now in a downtrend, looking for potentially the 115 area. And what's really happening on both of them that's more exciting is you're taking and finally getting the Bollinger Bands to come in the way that they did back here. And whenever you get that, if you get enough sideways action, it means a trend is about to hit again. So you wait for it, and it's just all that vertical move ultimately sets up a trend. The key is catching which way the trend's going to break out. I'm Ira Epstein. You have yourself a good weekend. Remember about our gold report. If we're not here on the weekend, if you leave your name and number when you call in, leave an email address as well. We will make certain to get everything to you. We'll contact you and get you set up on our charting software if you've not tried it either. Have a great weekend. I'm Ira Epstein.
Bhurvasuraha